Audit Planning and Fieldwork Group 3.
Audit procedures. Audit procedures can be defined as the actions that an auditor takes in acquiring evidence. Specific procedures used to determine whether audit objective is met can be used in test of control and substantive test. Test of control and substantive test. Test control 1. Procedures to test the operating effectiveness of controls in preventing, detecting and correcting material misstatement. 2. Provide reasonable evidence. 3. Involves obtaining evidence about design of policies or procedures. Substantive procedures. Procedures to detect material misstatements in account balances, a class of transaction and disclosure of F's designed to test for dollar, monetary, misstatement reduce detection risk.
There are 3 types of substantive procedures. 1. Substantive test of transactions, test of details of classes of transactions. 2. Substantive test for account balances / test of detail of account balances and disclosures. 3. Analytical review procedures. Substantive test of transactions or test of details of classes of transactions. Transactions test for errors and AMP. Fraud in individual transactions. Substantive test for account balances or test of detail of account balances and AMP. Disclosures ending general ledger balance for statement of financial position item. Analytical review procedures. Comparison of recorded amounts to expectations developed by auditor involves the study and comparison of relationships between accounting data and related information. 2 types of audit evidence: sufficient and appropriate evidence. Sufficiency considerations that may affect the auditor's judgment as to the sufficiency of evidence include materiality, risk, economic factors, and the size and characteristics of the population. Reasonable basis for an opinion on the financial report. Quite often determined by reference to sampling, quantity of audit evidence necessary to provide the auditor with a reasonable basis for an embodied in the components of the financial report and to give an audit opinion. Appropriateness relates to the relevance and reliability of the underlying data and corroborating information. Relevance requires that the evidence be pertinent to the auditor's decision related to assertion being tested. Reliability of evidence is influenced by its source and by its nature.
Circumstances that could affect the reliability, increased when it is obtained from independent sources outside the entity, generated internally, evidence obtained directly by the auditor in documentary form provided by original documents.
2 factors that influence the sufficiency and appropriateness of evidence are auditors' assessment of the nature and level of inherent risks, nature of the accounting and internal control systems. There are 8 types of audit evidence, such as 1. Physical examination or inspection of tangible assets. 2. Documentation or inspection of records or documents. 3. Observation. 4. Confirmation from third party or external confirmation. 5. Inquiry or interview the client. 6. Recalculation or recomputation. 7. Reperformance. 8. Analytical procedures or analytical review procedures. First, physical examination. Inspection or count of tangible asset is to test existence and AMP. Eventually provide evidence towards valuation. Example, stock. Example, count petty cash on hand on surprise basis. Verify the amount of common stock. Next, documentation. Examination of client's documents and AMP. Records to substantiate the info that should be included in financial statements. Examine a sample of 10 suppliers' invoices. 2 categories of document. 1. Internal document. 2. External documents. Internal documents, ID, are documents prepared and AMP. Used within a company without going to outside party, such as customer vendor. Example, punch card, duplicate of sales invoice, copy of office receipt, internal report, purchase requisition. External documents, ED, are document either originated by an outside or third party. Example, supplier's invoice, bank statement, validated deposit slip. Observation. The use of the senses to evaluate certain activities usually used by auditors during the study and AMP. Evaluation of client's IC example. Observe the handling of cash. Observe whether the storeroom with valuable items always locked. Confirmation from third party or external receipt of written oral response from an independent third party verifying the accuracy of the information requested. Example, confirm client's cash BC with bank, confirm AR balances. 2 types of confirmation, positive and AMP. Negative positive. Third party respond to auditor regardless whether the amount correct or not. Negative. Third party respond only if they disagree with stated amount. If no reply received after certain period, auditor may assume info correct. Inquiries of client O. Obtain written or oral info from client O. Example, inquire with the management whether there are obsolete stock/collectability of AR balances. Recalculation, the rechecking of a sample computations and AMP. Transfers of info made by client during the period under audit. O. Example, check the calculation of depreciation expenses, accruals, prepayments. Recompute invoices amount. A calculation.
Performance. So auditor perform procedures in accordance with the client's manual of procedures.
Example, evaluate the reasonableness of receivables by calculating and comparing ratios. Compare expenses % of net sales with prior year.
Thank you for lending your ears.